Some of you guys must have given up on SMC because you think that your win rate is low. But I'm here to tell you today that the problem is from you because you have been focusing on the wrong side of this particular concept. In today, I'm going to break down this chart you are seeing, how you're able to get this particular sweet trade in your front using only SMC. No moving average, no indicators, nothing. Only SMC, strictly SMC strategy. And what are the basic core things are you focusing? We are using our break of structure, change of character, and our fair value gap or neither order block and liquidity only. If these things that I listed out are not in concord together, we are not trading. This is the only thing we'll be using, and I'm going to show you how you can be able to increase your win rate with this particular SMC strategy that I'm about to teach you. Now let's dive into the market. You can learn a lot from this particular setup, okay? Get your pen, get your book, let's learn something, okay? Guys, let's dive in. So, first of all, we do it here. We go to our weekly time frame. Let's see where we are going. Are we going forward? Are we going back? This is EURUSD. In our weekly time frame in the EURUSD, we are focusing on the current market data. In our current market data, this is our latest break of structure to the downside, showing that what the sellers are in the market. We are going down. Simple. Now, write it down in your weekly time frame that the weekly time frame is what is bearish. Now, listen attentively. We have this particular break. Let's go back in time. This is our change of character, and this is what are you going to call this? Retracements. All these are called retracements. Now, because there's this change of character and the market is now bearish, are you not going to trade this retracement? Are you just going to wait? You will sit down and wait till price reach your point of interest, which is this order block. You will not be doing anything. You'll be waiting. This is when your psychology comes in. You'll be tested to trend against the trend, and you're going to lose money. Now, do you know the right question? The right answer is do not wait. Trade that retracement. You're a forex trader. Find that opportunity. There's opportunity in the market. Your ability is just to find it out and milk from it. Do not rest. Trade it. Now, let me teach you something again. Let's go. Let's continue. Let's take all this out. Let's take this out. And now, this is the recent break of structure. And where is our order block? This is our order block. We are waiting for price to do what? To retrace and tap us into here. Are we just going to sit down here and wait for it to happen? No. Because this retracement only can change the lower time frame bias to bullish. This retracement now can change it to bullish. Okay? So, let's continue. In our daily time frame, remember, this blue line shows the current data of the market. We are focusing more on the current data. We are not blabbing, okay? We are not using all this old data. No. We're just focusing on the current data. Do you understand? So, let's continue. In the daily time frame, what do we have? We have our break of structure to the downside, confirming the one of the weekly time frame, which means our weekly time frame is bearish, and also our daily time frame is what? Bearish. Are you jotting it down? Jot it down because you need this. So let's continue, and let's amend this. This should be our latest order block. What is order block? The last bullish or bearish candlestick before an impulsive move. That is order block. This is the last bullish candlestick before this impulsive sell movement. So therefore, this is what our order block, as easy as ABCD. What is liquidity? Money. Where money lies, that's liquidity. So after this, from our current data, we are expecting price to do what? To push to the upside. Now, our job as a trader is to join the market, follow the market. I've already predicted that price is going to come to this side, right? Okay. Should I go and relax and sit down? No. What should I do? I'm going to trade it. I'm going to join the movement. That particular price that is coming to this my point of interest, I will follow it there. I will follow it to that point of interest. Do you understand? So let's follow it. Let's check if we can be able to follow it. Now we are not bullish. We are bullish because this small data If you go down to the 15-minute time frame or 1 hour time frame, so this is a bullish market. But let's continue, okay? I'm not going to get you guys confused. You guys are going to learn a lot, okay? Let's continue. In our 4-hour time frame, what do we have? 4-hour time frame says otherwise, because in this 4-hour time frame, what am I seeing here? This is our latest break of structure to the downside, and price already mitigated its order block. First, price tapped into it, retraces, tap the second one, tap the third one, and tap the fourth one. What does this signify? Weaknesses. We are trying to push up. Once price have the opportunity or gain the momentum and strength to push and break this particular place, we are going here. This is where we are going. I hope you understand. So after seeing all this, you take this out. Let's take this out. Let's go down again to our 2-hour time frame. In our 2-hour time frame, here we have a clear picture. You can see the latest break of structure. This was the change of character. You know what is the change of character? A change of character means when price wants to change in state of delivery. If price is changing from an uptrend to a downtrend, it's going to form a change of character before going to a downtrend. If it's changing from a downtrend to an uptrend, it's going to form a change of character before going to the uptrend. So price was pushing down. You can see it's break of structure, break of structure, break of structure, boom, change of character. And again, a new break of structure to the upside. Now, boom, on that change of character. Now, after the change of character, where is going to be tested? Where is price likely to test? Price is likely to test this particular place because this was the origin that causes this particular change of character. And again, this is liquidity. You can already mark it out. This is liquidity. This shows that price is going to sweep the liquidity, tap us in here, and boom to the downside. Are we going to wait and watch it? No. we're going to opportune ourselves and follow the market anywhere it's going. So let's continue. Let's continue. In our 1 hour time frame, you can see in our 1 hour time frame. Now, this particular market here, I met it when price was here. I think was here. If you're in my Telegram channel, I send this signal when price was in this particular place. Price haven't retraces down here. Price was still in this particular place. That was when I sent the signal out. Okay, so this was the break of structure to the downside, and this is where we're expecting price to push up or to push us up to before retracing. Okay, now let's go on to a 30 minutes time frame to see something clear. Now in a 30 minutes time frame, we already have our confirmation that we are going up. You can see that we even have our confirmation that this retracement is a valid retracement, that we are going to the upside. This is the confirmation here, guys. If you can see this clearly, this is a break of structure to the downside, and this is a change of character that shows that we are no more going down. We are not changing. We are not going to do what? We are going up. And as we are going up, where are we targeting? This particular place. This is where we are targeting. Okay, so all I did was I positioned myself. This is a sharp entry, expecting price to retrace and tap us in this particular place before booming to the upside. Now, the next step I applied here was our entry pattern. What is our entry model? The CRT entry model. CRT entry model. Let me show you the CRT entry model in this 30 minutes time frame. You guys already know what is CRT. I taught you guys in my last video. Go and watch. You know what is CRT. Look at the CRT here. You guys can see the CRT. This is the CRT because price swept below and tap us in here. This is the low. Look closely. Let's take this out. This is the low. Okay, this is the low, and this is the sweep. How does this justify our entry? This is the low and this is the sweep, creating a CRT movement. Let's go down to our 5-minute time frame for a clearer picture. Now in our 5-minute time frame, you can see this. You can see it clearly here. This was the sweep of that particular low, and price closes inside it, showing that this particular CRT is valid. This is a reversal CRT. Price closes inside it. Then your entry as a smart trader, if you don't want this sniper entry, your entry as a smart trader should be here. Okay, yeah. Once after this closes, you enter from here and Your stop loss should be below this particular CRT here, and this alone is going to give you you're targeting this nearest draw in liquidity, which is here. You're targeting up to 1:11 risk to reward ratio. Wow, you can see it. If you're a sniper entry trader, okay, this is going to give you a 1:11 risk to reward ratio. But as a SMC, you need to let your stop loss breathe. Okay, your stop loss need to be breathing. That's why I gave it at least up to 5 pips stop loss. That other one is never up to 5 pips, so it's not up to 5 pips. But this particular stop loss is up to 5 pips stop loss, and price did what? Boom to the upside. Now, why did I not target this particular place? That will be your entry. Why did I not target here? Listen, we are counter trading. We are not supposed to buy. We are supposed to sell. But because there's a buying opportunity, we need to make from it. That is why I was able to take at least my TP was in the nearest draw in liquidity, which is here. And I closed. I didn't even wait or act greedy. I did not call this TP1. I did not call this TP2. I did not call this TP3. I just closed. Spam. Once price reached in this particular place, I send my signal, close this particular trade, and we close in this particular place. As simple as that. Because of what? Remember, we are counter trading. So guys, this is Euro USD. Go and backtest this particular strategy in your trading view and come back and tell me this particular win rate. Okay, remember, if you mark any other block or you mark any other block from the higher time frame, go down to the lower time frame and trade that counter trade. Okay, trade it and always use the CRT model entry for your any confirmation anywhere. Okay, thank you guys for watching this video. I see the main OLUWA-POUNDS. If you are new to this YouTube channel, I always drop good and powerful video that's going to improve your win rates in trading. Remember, all we do in this particular channel is to keep it simple. As simple as what? ABCD. Do you understand? Don't forget to like, share, and subscribe, and see you guys in the next video.